Welcome to the Crypto Morning News. I'm your host, Taylor Shrum. NVIDIA earnings takeaways. This is from CNBC. Bubble talk, half a trillion forecast, China orders. There was a lot discussed yesterday in the earnings call for NVIDIA, but the main takeaway is that the print was favorable. They made a lot of money, and they made a lot of money compared to the past, and they also projected to make a lot of money. And there's this big unlock, which is the ability to sell to China, that they still haven't been able to crack that nut, but if and when they do, that could be very big. So half a trillion forecast is on track. That's the guidance piece that's got, the stock market up today and much of crypto having a bit of a rebound, which is nice to see. I don't know how much I trust the rebound, but we'll talk about that in a few minutes. The company eventually got the licenses to be able to sell the chips to China, but it turns out that the sales of the H20 chips during the quarter was insignificant, right? So that's kind of the downside. There wasn't a whole lot of downside, though. Other than that, the market was not expecting those China sales to really be all that robust. So the fact that there was none, just kind of gave predictors what they were looking for. Talk about a bubble, though, and we're getting more of this. Ray Dalio coming out today and saying that there's a bubble, not necessarily to sell it, though, which is interesting. There, you can see it right there. Ray Dalio says we're in a we are definitely in a bubble, but that doesn't mean you should sell yet. That's the headlight there from CNBC right there. That's what I'm looking at. So this is what Jensen Huang, CEO of Nvidia, said. He said, there's been a lot of talk about an AI bubble. From our vantage point, we see very differently. Huang said that people will soon start appreciating what's happening underneath the surface of the AI boom versus the simplistic view of what's happening to CapEx and investment. Bernstein analyst said in a note that Huang's comments helped settle investor fears of a bubble after a recent pullback in AI names, saying perhaps the AI trade is not dead after all. More than just good numbers, we believe investors needed some hand-holding from Jensen, which he provided in spades. Okay, so Elon Musk, Jensen Huang, Donald Trump, right? These people are keeping the equities trade going. They're keeping bullishness, pumping up that bubble if there is a bubble, right? They're pumping that up and keeping it inflated. But they're doing what they have to do to keep interest, to keep attention, to keep AI sexy. As I stand before you, I also don't think that I'm kind of on the Huang side, the Jensen Huang side. I don't think that there is a bubble in AI in a lot of the ways that people are thinking about it. The most famous bubble, of course, is the 2008 housing crisis bubble that was predicated on Wall Street and the mortgage industry believing that people with AAA ratings, AAA credit ratings, high credit ratings, that they were actually creditworthy, right? And when I say AAA, that was the equivalent of what the mortgage-backed securities ratings were getting from rating agencies like S&P and Moody's, and Fitch coming out and saying that. Now that was a bubble because the rating agencies were misrating mortgage-backed securities that had within them uncredit unworthy people, right? People that should not have been getting loans and mortgages for homes, in hundreds of thousands of dollars. That was a classic bubble because people did not observe it. A few people like Michael Burry, who just closed his hedge fund, by the way, but a few people did observe it and they made a lot of money, but nobody believed them at the time when they said, hey, these mortgage-backed securities are subprime. They're not prime. They're subprime. Nobody believed them. Where we are now is very different. You have on the front page of CNBC.com and Bloomberg every day, somebody new comes out and says there's an AI bubble, right? There's memes on the internet of these major AI companies kind of creating this circular investment type of investment logic that's scaring people into thinking there is a bubble. I don't think there's a bubble. I think what this is the computer on steroids. That's what artificial intelligence is. It's going to compress costs and expand margins for U.S. corporations and for corporations around the world. It's going to make processes more efficient. And I think we're only getting started with that. No, of course, it's the timeline that's difficult, and it's the education gap between technologists like Jensen and the actual market participants like Wall Street. So far, Wall Street has given AI companies the benefit of the doubt, said, "Hey, look, just take our money. AI looks pretty cool. We talk to it all day. Just take our money. We'll see what happens." Okay, and Jensen Huang and others are like, "Okay, well, let's go. Let's do this. Let's make it happen. Let's make America great, right? Let's make America the hottest country in the world." Um, but the mark, but more and more Wall Street that gave AI the benefit of the doubt, more and more of those participants are saying, actually, now we want to see the results. Where's the results? And Jensen Huang and Elon Musk yesterday were saying things like humanoid robots are going to end poverty. Or why are they saying that specific? That's a very specific statement from Elon, right? And I do think that that is a very important statement because that kind of front runs. We're not going to see that happen, right? The timeline is the part that's very opaque. We're not going to see humanoid robots end poverty tomorrow or in 2026. But in 2027, there is an argument to be made that you might start to see a needle tick, right? And so it's in Wall Street's interest, it's in people who are looking for a return on investment to continue to try to outpace their competitors in Wall Street in investing in these names like OpenAI, like Nvidia, Microsoft, Amazon, Google, on down the line. I don't think there's a bubble because the word bubble is inappropriate to use here. I think that there will be some heads that roll. There's some smaller LLM operators that are spending a lot of money on marketing right now. You probably see them, Anthropic and Perplexity. They're great LLMs. I'm not saying they're going to get flushed down the toilet, the technology that they've developed, but you know, when there is a bunch of people calling for a bubble, I think what that means is that there's too much investment is getting top heavy and that there's going to be some sort of reckoning, right? That doesn't mean that the whole outlay that's been created through all this new investment, hundreds of billions of dollars, is going to go to zero. It just means that segments of that big conglomeration of investment is going to get reorganized. Some of it may go to something approximating zero. Said a lot about AI. We learned something. We learned something very, very important over the last 24 hours. When the favorable Nvidia earnings came out, we saw risk across the board go higher. Okay, that's for Bitcoin, that's for Ethereum, it's for Solana. Before I get to the charts and show you guys crypto, I want to talk a little bit about the jobs report that came out this morning and how that's affecting markets. But where I really want to land this AI piece with Nvidia's earnings is everything went higher, right? So what does that mean? Go search this statement and learn more about it, or come into the Discord. I'll explain more of it. But crypto is emerging to be in this post four-year cycle world. So post that's no longer relevant. We're moving forward into a new uncertain world. Crypto proved yesterday, proved is probably too strong of a word, but we have a solid data point that crypto is essentially a beta play to tech stocks, to tech, right? Crypto is tech. Now, there's infinite arguments why it's not just tech. There's infinite arguments why, okay, maybe it's a beta of tech, but there's certain names that are going to be different. Bitcoin, Tau, Ethereum, yes, but crypto is technology. It's trading. It's reacting to the NASDAQ, and it's reacting to this earnings report that we saw from Nvidia. So that has good outcomes, that has good connotations, that also has bad connotations, associations, right? If you're a beta play of tech, that means you're much more volatile. And that means that there's going to be there's going to be names within that beta play of tech that are going to just fail, right? Because they're volatile because there's a lot of energy, a lot of excitement going into those names, going into cryptos like Chainlink, going into cryptos up and down the line, Polkadot, Tron, Arbitrum, Optimism, Litecoin, whatever it's going to be. But they're, at the end of the day, moving out of this phase where the four-year cycle favored high promise, right? Claims about the underlying project. We're moving out of that phase of promise into the phase of post-IPO, right? High beta, NASDAQ, crypto is tech. Yes, it has this weird modification to it where, Nvidia doesn't get to have a coin, right? And it doesn't get to have uh, a gambling dApp built on top of its blockchain. So there's all these new nuances where cryptocurrency is not a beta of tech. It's much more different. But the phase that we're in right now, the cycle, again, post 4-year cycle, now in the IPO phase for crypto, not ICO, don't get it twisted. It is all about revenue. It's all about value generation. The same people that are involved in investing in Snowflake and DraftKings and Robinhood and Coinbase, they're now shifting their gaze to crypto and they're saying, okay, we're institutions. Everybody's saying institutions should invest in crypto. How do I do this? What do I do? What do I look at? They're not going to just look at, okay, well, what did Charles Hoskinson say? Is how popular is he? How many people follow him and love him? That's not what the type of things that people look at on Wall Street. It is the type of things that people look at in the old crypto world, investment world, where retail cares a lot about the leadership, cares a lot about the aspirations and the promise of the project. Wall Street cares about the leadership, right? But they just want to see competence. They don't want to see so much that there's a promise to be made. The promise is clear. Blockchain is better money, but it's got to make money. It's got to make me money as a coin holder. Okay. So at some point, Wall Street is going to ask that question. And I think that that is happening now. Hopefully, this is all making sense to you. Let's get into the jobs data because there was a lot of interesting outcomes there. It's bad. I will say it's bad for us. It's bad for risk holders. It's bad for people who want asset prices to go higher. It's bad for people who want the Fed to cut rates. But there is a little bit of hope in here. So let me point this out. Let's just get through this part. So delayed September report shows U.S. economy added 119,000 jobs, more than expected, while unemployment rate rose to 4.4% from 4.3% previously. So unemployment rate threw us a bone, threw risk a bone, saying, hey, the employment rate is going up. You got to do something about it, right? So things are still worse from that's what the employment rate is telling us. The non-farm payrolls are telling us the opposite. They're saying, okay, we added negative 4K jobs in October or whenever it was, the previous print. I don't know when it was. But this week's the September print is 119K, right? 119,000. So that's very good for the labor market. And so that's going to be putting pressure on the Fed to try to figure out what the heck should they do, because it's not clear. I've seen it described as a razor's edge decision. It could go either way. I think this data ultimately probably pushed it over the edge to not cut. But here's the reason why they would probably still cut. Again, I'm not saying whether they are or not. I think it's literally 50-50. It's very difficult to know. Now they're not going to make that decision until December 10th. So the poly market spread, cutting to the chase here, the poly market spread has a lot of time to smooth out this volatility, right? Since essentially November 17th, right, there was this cross and it became less likely that there was going to be a cut. It crossed again, and then it just skyrocketed that there was not going to be a cut, right? That there was going to be a pause. So no chance, no change. One thing you'll notice is that's coming back in. That certainty is coming back in and narrowing. I don't want to read too much into that. Honestly, the point I'm making is we're not going to have multiple weeks, but we're going to have several days. We're going to have about 17 days ish, something like that. And the markets are going to be able to digest this. This is just reaction, right? And there's going to be, I would make the argument that these spreads are probably getting lowercase manipulated, not heavily, but there's a lot of uncertainty. This chart is telling me we're going to have more certainty by probably December 1st, December 5th. Like we're going to start to see these kind of normalize and we'll have a good idea of what it is. And I don't know. I think there's a decent chance as not that we are going to still see a cut in December. Here's why. First of all, the unemployment rate's still going up, right? 4.4 is a increase from 4.3, right? This which is not what the Fed wants to see. They don't want to see increasing unemployment. They also don't want to see this. They also don't want to see continuing jobless claims going higher. So the previous print was 1,916K. This print was 1,921K. I know these are weird numbers. Why is it? So that would be a million. Okay, so that would be 1.9 million. I don't know why it's printing like that. But now the estimates were higher. The estimates for the continuing jobless claims were higher, so it beat that. It came in cooler than what the economists were thinking, but it still came in higher than the previous. So this data point and the unemployment rate, which is 100% information that the Fed looks at, that still gives a pretty decent chance to a cut, right? Because the overall employment picture is basically telling us this. The job picture in the United States is uncertain because of AI. That's just the backdrop. Uncertain, but not necessarily terrible. It's not necessarily doomsday. We don't really know how AI is going to affect it, but that's absolutely the backdrop. That's why these Fed members, when they go do their speeches, they get these questions and they have to ask and talk about AI, even though they don't really probably understand it all that much. But that's the backdrop. Then you zoom in, and the labor picture is pretty bad, right? 4.4 unemployment is not ideal. However, it's not terrible. It's not 8. It's not 20% unemployment. It's actually in a pretty decent range, but it's not ideal. And the directionality, the increasing, is the part that's very not ideal, right? That it's going in the direction of bad, not in the direction of good. Okay. So all of this can kind of come together and say, well, they made the decision in September and then October to cut the rates. So they would need to see something different in order to not cut in December. But the question is it going to be enough, right? And that's what the polymarket spreads are trying to figure out. And it's a 50-50 thing, right? But I think that they want to avoid the labor market getting to the point where it's so bad that they could have done something and they didn't, right? The problem is that they already have done something, which is cut in September and October. Okay, so that's the labor picture. It's kind of a right down the middle. There's enough. There's some morsels for the bears. There's some morsels for the bulls, for the hawks and the doves. There was something that both of those camps are going to be able to chew on throughout the rest of the day as the market tries to digest this stuff. What I wanted to show you on the charts as we wrap up here is the higher highs and the higher lows comparisons. So I have Jupiter pulled up here. Jupiter after the print yesterday for Nvidia. Now, again, this is also illustrating that crypto is a beta of tech, right? Beta of the NASDAQ. You guys can go look into that more to understand what that means. Is essentially if the NASDAQ's doing this, right? Beta plays are kind of following in the same direction, but they're much more exaggerated in the volatility. Okay, so Jupiter here did very well, and this is what I wanted to camp out on: is the difference between the previous highs that we saw here and the current highs that we're seeing here. So this high much lower than the new high here. So I'm going to go through these fast. Jupiter looks okay. Now, what I will say, lower lows here, right? So keeping that in mind. The most impressive one looks to be Solana. So Solana has higher lows, and it also has higher highs here. Okay, so keeping that in mind, this looks pretty good. This looks pretty good. Its reaction to the Nvidia was very positive. It put in a higher high. That's fantastic. However, let's go look at Ethereum. Not the same. Okay, you have a low. You don't have a lower low, but you have. I'm sorry, you do have a lower low here, and then you have a much lower high. Okay, so not great for Ethereum. Not, I think that has a lot to do with how much tourists came into the Ethereum ETFs and how many people are not here to stay in crypto when it comes to their conviction in these underlying assets. Whereas Solana, its ETF has gone live within the last couple of weeks, and it has had nothing but inflows. Right, this is Solana's inflows going, and it's only increasing more recently. Right, so as the prices are going lower for Solana, the bulls are coming in and saying, "I'll go ahead and take this. Yeah, give me Solana at these prices. That's good." For Ethereum, and they're expressing that through the ETF. For Ethereum, it's not so much, right? If you look here, now this obviously has much more data, but if you look here, they're not saying this in the last couple of days. The Ethereum investors are saying, let's hold off. In fact, I want to go ahead and take some profit, or I want to get out here, and I'll see what happens in a little bit. But what you will notice is that if you zoom in all the way here to these last couple histograms, that sentiment is waning. Okay, so that this histogram cluster here is waning. We could see our first green histogram here since back on the 6th of November. Okay, looking at the weekly for Ethereum, you see something similar here. The clusters are decelerating, looking somewhat promising. Okay, that's Ethereum. If we go over and look at Bitcoin, Bitcoin is a little bit ahead of the game. Still very, very dramatic and bearish histogram clusters here. However, we have our first daily green sprout here of green histogram to the upside. That's right. Yesterday, the 19th, there was a net inflow for Bitcoin ETFs. Very bullish there, at least in the short term. So that is what we want to see. Essentially, something like what happened back here, where you had the red histogram clusters, but then you leverage that low prices to be able to entice new investors into the market, and then you push higher, right? So right now we're coming out of a big movement to the downside, a big outflux out of the Bitcoin ETFs, capital rotating out of Bitcoin with a couple exception days, right? But now this could potentially, the door is open for a reversal, for ETFs to reverse their sentiment and come back higher. We're seeing it for Solana, right? We're seeing it for Solana. The inflows never stopped. We're also seeing it, I will point out, just to be fair, I'm not the hugest XRP fan, but we're also seeing, very good inflows for, in terms of consistency, for XRP. Okay, so jumping back over to the charts, you can see here that for Ethereum, or you can see here, essentially, like how are the bulls acting? And the bulls are acting like meh for Ethereum. For Bitcoin, I'm going to be honest with you, it's about the same. If you're just measuring out highs and lows, lows and highs, right? You got a lower high here and you have a lower low here, right? That's Bitcoin in kind of this Nvidia news cycle type of situation here. And it's selling off pretty good right now. Selling off pretty aggressively right now, down to 90%, big candlestick here. I'm on the 4-hour. But let me just come back. For Solana, it's just different, right? Higher highs, higher lows. Okay. It's an ETF driven market. That's what we're here. That's the conclusion you should be pulling out from this last few minutes of analysis as I'm wrapping up. Now let's look at some other coins. And Chainlink, right? Chainlink actually not looking too bad here. You had the bad news here is you had a lower low, but you just got a marginally higher high here from Chainlink. So this is good. Again, I'm not saying that this, let me be clear, I'm not saying that these are bottoming signals necessarily. What I'm saying is let's look at how these are performing relative to this Nvidia news cycle, right? You saw a general slowing down of sell-off here, and this is kind of congruent throughout most of the cryptos here, is that you're seeing the momentum of bearishness kind of cool off, not go away, but cool off, not go away. How do I know that? Lower hellos here for Bitcoin. But overall, you're seeing an improvement and then capitalization on that Nvidia headline, but not enough to bring it back decisively into some kind of actual sexy confirmation of a bottom. We're not there yet. We're not confirming the bottom yet, at least for the names that I've shown here. And I've got my Chainlink shirt on today, right? I'm bullish on Chainlink. Haven't sold. I think Chainlink's actually one that I'm still in a decent amount of profit because of I bought quite a bit low and I did not DCA high, which is good. I did not do the same with a lot of other cryptos though. I kind of waited and then started DCAing once they were a little bit higher, kind of mid 2025 area, mid to late 2025. So let's say Aave was another one that stuck out to me, showing strength here. And I think, by the way, I'm showing you all this because as tough as it is to look at some of these charts, I'm not showing you the drawdowns. That's the painful part. What I'm trying to show you is like, what is the shapes? What are the patterns that we're seeing here as we're kind of toying with a potentially like a weekly bottoming potential here. For Aave, you still have the lower low, right? But you are seeing a marginally higher high, or at least a congruent high, right? Not able to build off of this high back here from November 17th, but you can kind of just generally see like the slowing is the selling is slowing, right? Doesn't mean that we can't have a drop lower. Not saying that. But for those who want to see the number go up, that is encouraging, right? All right, Uniswap, little bit different. Still actually got a lower high here, and a lower low. So Uniswap not showing that strength. However, it had a huge run up here when that fee switch initiated, or when that fee switch proposal was proposed, and definitely not initiated. We're not there yet. Compare that to Solana, right? There was no fee switch movement to the upside like we saw for Uniswap. AVAX, yeah, this one does not look great. Just say it, but fundamentally, it's still super sound. A lot of institutional connections, right, for AVAX, and I think it's going to do well once that liquidity piece is back intact. All right, let me wrap up with this. This one's Aerodrome. This looks pretty decent because you do have like this consistent low. I mean, it doesn't look fantastic, but again, selling is slowing, but you did not get a higher high. Okay. Aerodrome, though, a lot of strength. This one is kind of similar to Uniswap in that it had a big run up. So that's pretty cool. Again, I'm just I have what I've got. The last things that I've purchased recently are Hyper Liquid and Aster, right? So those are ones that I've picked up more because I didn't have much exposure to them. And since we're down here in the doldrums, I might as well go ahead and pick some up. Now, can we go lower? Yes. Still saying we can go lower. All right. Next week is going to be a little different for the morning news. Monday and Tuesday are uncertain. I don't know if I'm going to do Monday and Tuesday. Hopefully I will. But it's dependent on internet. My wife has an occupation where we travel a lot. And since I'm a remote worker, I travel a lot with her. Every 3 months I move. Okay. So I'm moving this weekend. So that's going to be a lot of chaos. And I just don't know if I'm going to have internet to do the morning news. Wednesday, I should be back. I think we're going to move the time to 9:30 New York time. So 9:30 New York time, Wednesday, I should be back for the morning news. Look, if you are wanting to get into crypto trading, but you're down a lot, right? You don't want to sell your bags to fund. You don't want to sell for a loss crypto to start trading. But you do have a little bit of capital. You got like about 1,000 or less. You can work with our partner Breakout. So Breakout, there's a link for them down in the link tree below this video. Breakout is called a prop firm. Now, a lot of people don't know what this is. You can research it, but essentially you buy an account for $1,000, isn't for an example, and you get access to $100,000 of tradable capital, and you get to enjoy the same amount of upside as you would have from having a $100,000 account for only $1,000. Now, there's all kinds of details and all kinds of stipulations, but prop trading is very popular with people who are, pretty confident with trading. And if you're just getting started with trading, think about it like this: there are packages with Breakout that are less than $1,000, and that's all you can lose, right? So if you put in $1,000, you're trading with 100,000, so you have that upside potential, but the most you have to lose is $1,000, right? And then there's packages that are less than 1,000. So go check them out. Don't have to sign up or anything if you don't want to, but go look into it. It's good to know what a prop trading firm is if you're going to be a retail investor and trader. Breakout is who we've partnered with. In fact, there's not a lot of other crypto prop trading firms in general, but Breakout's really, really good. And they also just added some compatibility with Kraken because there's a lot crack-a-lacking with Kraken and Breakout, which is a good thing. Let's see if there's any comments that if I answered them, they would be helpful for the whole group here. Let's see. All right. Just reading through here. Like the link shirt, my dude. Haha, great stuff. Absolutely. Go Chainlink. I'm team Chainlink. Retail searches for AI bubble hit all the time. High yesterday. Retail searches for AI bubble hit all-time high yesterday. Retail do not get it right. There may be a bubble down the line, but not yet. Just my opinion. Well, that's also the opinion of Ray Dalio, apparently. Thinks we're in a bubble, but the bubble's not over yet. Yeah. I mean, the AI bubble is so interesting, right? It's the hot topic of our time. The problem is if everybody's talking about a bubble, then it's not a bubble, right? It's too known of an entity. Now, what it could be is a bunch of analysts that track names like Nvidia and Oracle and CoreWeave and these types of stocks. They're wrong. That's what it should be called, is that analysts, skilled analysts at Morgan Stanley and Goldman Sachs and JP Morgan are wrong about AI, right? But as long as these guys, these analysts, which they all talk to each other on Bloomberg, like they're constantly in contact, they're publishing reports and stuff. They see a bright future for AI, a very bright future. In fact, is the brightest future ever because of what AI can do for corporations. It can compress costs and expand margins, and that's all Wall Street has ever wanted, right? Is for corporations to compress costs and expand margins, expand revenue. That's all that Wall Street has ever wanted. So if I'm an analyst studying Nvidia, studying Oracle, studying AMD, that's good. I can't put out a report saying, hey, this is actually bad, it's scary, because what the technology actually does is real, right? And that promise is real. We just haven't seen it yet. We haven't seen what Elon Musk is claiming, which is that humanoid robots paired with AI is going to end poverty, right? But these claims are kind of in the realm of possibility of what we could see within the next 3 years and certainly within the next 5 to 10 years. Ending poverty is such a black and white thing, to put it that way, but that really is the scale of the types of things that AI and robotics, when done professionally, when done at a very high sophisticated scale, those are the types of things that can be accomplished. So Wall Street's very interested in that, right? It's not interested in taking profit and walking away and going and just investing in railroads and pharmaceutical companies, right? It wants to just keep taking risk in this huge moonshot of a play. I like it. I'm staying with it. I'm down on CoreWeave overall. But I still think that this is going to come back. AI is going to come back, and I think that we talked about the Fed cutting. Like, I think that plays into it in a big way. But there's this stalling of liquidity, the liquidity picture, and I think that the liquidity picture is very opaque. I think a lot of people have been talking with a lot of confidence about liquidity, talking about M2, talking about even the Treasury General account with a lot of confidence. But these things are very, very complex, and there's so many decision makers that affect all these different tranches of liquidity all over the world. And you throw into that the Japanese carry trade could potentially be shrinking. Man, it's just a recipe for uncertainty, and certainty equals risk off, right? But you have this really clear argument for risk off sentiment. At the same time, there is AI and crypto that are sitting here revving their engines, and those engines sound so good, right? So there's these weird contradictions, these upside down elements of the market that are just, they don't fit together, right? People can't find jobs, but there's these industries that are sitting here just revving their engines like, and they sound like the new railroad. They sound like these crazy opportunities. It's a great time to be an investor and properly manage your risk. All right. Blazing Bandit said, I agree. Most people cannot foresee the future like Elon is able to. I think he's right. Yeah. I mean, these guys are just seeing it day in and day out. There's not as much doubt in their mind as some Wall Street analysts who's just looking at spreadsheets all day. Like, they're speaking the language of numbers coming to them through a computer screen. Elon and Jensen Huang and Donald Trump, who's getting to tour a lot of these facilities and see how these deals are going, they're so comfortable being super bullish because they're seeing it. They're seeing the robots come to life and perform better and better every day, taking pieces of paper, ripping them, or folding laundry, whatever it is. And Jensen Huang on his side is seeing these processors perform better and better benchmark trials. So it's AI and aliens. Welcome to 2026. Says Alex Jones was right, 1776. I love it. That's funny. Waiting for 400 Chainlink. Yeah, I think we all are. Sup T, what would be the worst possible scenario for Bitcoin in your opinion? There's some, I mean, quantum hacks, right? China just starts hacking stuff with a quantum computer that nobody knows about, right? That would be probably the worst case scenario. But the problem with that is that we're all going to be at campfires by then. Like, nobody's going to be, every website, all the security that exists on the internet will probably be popped by the time anybody with a supercomputer can pop Bitcoin in SHA 256, right? Because that's the encryption. Like, people talk about the encryption for Bitcoin. The encryption technology for Bitcoin is not different from like like Gmail and like Google Chrome's encryption stuff. Like, all of that stuff is actually very similar. I'm not going to claim like I understand it down to the metal, but the reality is that if there's a real risk of Bitcoin being popped, which there is, but it's much further out into the future, than other stuff is will have been popped, including, like, Duke Energy's like security infrastructure, and then on the East Coast, or Georgia Pacific. Like, you have entire energy companies that could go down, not just in the US, all over the world, right? That's what I'm saying. We would be at campfires by that point. We would all be sitting there roasting squirrel meat and rabbit meat, right? Hunted. We would be back in the Stone Age in a lot of ways. So that's the worst possible scenario for Bitcoin. I mean, look, there's bad scenarios out there. We're taking risk. This is a high risk asset class, but in the past, the way that the market has valued these assets that are crypto has been very favorable, and all we have to do is wait for macro factors to align so that the sun can shine right down onto the crypto industry and put it in the perfect light. And I'm here to tell you that once the Federal Reserves gets their ish together and actually goes ahead and cuts the rates in anticipation for AI replacing everyone's jobs, which is the reason why I think they should cut the rates. I don't, all the incremental data we're getting, I don't know how convinced I am that equals they should cut the rates. They should cut the rates because the Federal Reserve probably shouldn't have existed. And so this whole US bond dollar system needs to be brought down to zero and just phased out and replaced with a much more efficient system of cryptocurrency. And that doesn't mean you stop using credit cards, right? It just means your rewards aren't in dollars. You're not paying in dollars. You're paying in whatever it's going to be, Solana, Bitcoin, or a Solana tokenized Bitcoin on Solana chain. Like, you probably won't know or care. Well, you will, listening to the sound of my voice, but your aunt isn't going to know or care how they're paying for something. They just know that the chicken that they just bought is now their chicken, and it only cost them about how, like, a 24th of a day's of a day's work, right? It's going to be a wild time, but we're getting there. We are getting there. It's just a painful transition because of the stuff that I've talked about before, which is that the people in positions of power in the private and the public sector do not understand this technology. Heck, there's a lot about crypto I don't understand. You're listening to the sound of my voice and you're maybe even in IT and you understand a lot of blockchain. Maybe you've even written in some of these blockchain languages and you've actually developed some blockchain solidity. Maybe you don't understand some of this stuff, right? So how can we expect people who didn't grow up with computers and smartphones and never learned a programming language, people like elected officials in Washington, to understand what crypto is? Or people who are just really excellent at being leaders and they're CEOs of investment firms and they don't understand blockchain. They're just barely understanding what the internet is, much less what NVIDIA. Look, it's taking this long well, I'm not sure if Berkshire Hathaway owned Google before this big $4 billion purchase of Google, but it's taking them this long to really show what's next for the future of investment. That is a big that Warren Buffett is the symbol of what is about to happen with Wall Street. Wall Street is run by people who have the Warren Buffett software running in their head, right? Warren Buffett, super good, excellent investor from the 70s to 2020 or whatever, right? You're just you're playing a game that's you're finding companies that are undervalued and you're buying them, right? It doesn't matter if they make ketchup like Heinz, or if they sell insurance like Geico. Warren Buffett just figured out I can go buy these companies in the public market and just own them, right? And the price will go up because they're undervalued. But that way of thinking, it doesn't go away, but it's very different. The economy and the macro environment that Warren Buffett grew up in and thrived in and led Wall Street with his company Berkshire Hathaway. There's so much that's different now from when he was sharpening his teeth and cutting his teeth and understanding the markets. And the biggest things are technology and the debasement of the US dollar, right? Technology is just on a different level now. It took Warren Buffett a very long time to buy Apple, and Apple is now, it's just a consumer product, right? There's a lot of technology. Warren Buffett didn't understand that. And that is representative of the old group that's leaving Wall Street positions of power. The new group is people like me, people like you, maybe if you're a millennial or Gen X, right? People who grew up not their whole youth, but a majority of their college years at least was spent behind a laptop. Warren Buffett did not spend time behind a laptop when he was in college, right? He didn't. Technology is not their native language. Technology isn't my native language, but the younger generation, Gen Z, it is their native language. And for people like me and most Gen Xers and millennials, we had to learn the internet, we had to learn computers, right? But that's now the majority of what the software is that's running on our brain is like, we trust technology and we want to invest in it. People wanting Wall Street right now, they do not trust technology in the same way. And so they don't want to invest in it. They don't want to embrace it into their systems that they deal with day in and day out. Let's see. Kenny G said, God bless the Tim Warren Company, trading company, and all its supporters. Amen. Absolutely. Moho said, I looked at many prop firms and didn't like many of the rules they apply. Breakout is really straightforward and fair. Love to hear it, Moho. Love to hear it. Glad you're liking it. Choosy Beggar has a gator logo in his profile picture and says, are we getting Lane Kiffin? Yeah, I think so. That's a little college football inside chat. Kenny G said, God bless the Tim Warren Trading Company. I love it. And then he said, fourth quarter is not over, and Q1, Q2 has a great chance of breaking out as well. I've been taking profits on alts that rally here recently to be safe. But I'm right there with you, Dan C. I think most of us are. Dan C. So should I keep holding alts for a better peak in the next couple of years? Dan C. said, cool beans. Some alts, Litecoin, ADA, XLM peaked last December. Regret not cashing something out. Okay, so let me illustrate something for you all. Because a lot of people got into crypto this year. A lot of people who are on this stream right now watching got into crypto recently. Okay. So what you all have to realize is that there have been people here for a long time. And I know you know that, right? But I want to hit it. I want that to hit home for folks. And then I want to answer this question that Dan C said, which is, should I hold altcoins for the next couple of years? What you should do fundamentally is buy low and sell high, right? As long as you have a time horizon that is long enough, meaning you're not retiring in the next 2 years, right? Or whatever. I mean, if you have a certain amount of money that you can afford to lose, regardless of your retirement status, your retirement trajectory, I'm here to tell you, I'm continuing to buy crypto altcoins. That might sound crazy in the current situation. I get it, but I've done the work, right? Me and my team, we've analyzed these markets. We've analyzed the underlying technology of what cryptocurrency is. And that doesn't mean we bought them all. It doesn't mean I still own Cosmos or Polkadot or many other altcoins, Quant, for example. There's many altcoins that I don't think are going to be part of the future. And unfortunately, for a lot of people, I think it's very debatable if Cardano is going to be a part of the future. I know that people wince when I say that. I haven't sold all my Cardano, but I have sold a decent amount of Cardano at the top, right? By the top, I mean August, right? September. Actually, it would have been October when I sold. So I sold 90% of my Cardano and I sold all of my compound. Now, could we come back mid 2026 and both of those names are higher than they are even up from October? Yeah. But my conviction in those names specifically was low. Why? Because I haven't seen those names, Compound and Cardano, doing much with institutions in the institutional cycle. So that gets a big X from me, right? Doesn't mean I don't think that there is a zero future for those names. I think 10 years out, when everything is built on blockchain, I think those names could be doing very, very well. It just depends how the market matures from here. Do we evolve into a world where all of the awesome technology that's been developed in all the different corners of crypto. There's projects that you've heard of, haven't heard of, like Pendle. Pendle's a good example. There's projects you probably never heard of, but that have extremely unique smart contracts and extremely talented developers, right? But is it possible that those projects don't make it through the filter that we're going through right now? And maybe it's this pullback that's the filter. Are there projects that get left behind and names like Solana and Ethereum take the mantle of crypto and just go down, right? And names like Bitcoin and Chainlink and who knows what it is. It's going to be up to the institutions. The ones that are obvious are Bitcoin and stablecoins, right? Those are through the Rubicon. They are integrated now into the global financial system. Ethereum is kind of right there with it, right? It's not fully in that, in my opinion, but it is right there. It's right at the gates. Solana, not too far behind, and in some days it feels like it's actually right there with Ethereum. XRP, Cardano, and many other cryptos, it's just like it's uncertain. How far back behind are they? Are they going to be able to make it to the castle, or will they be relegated to being just retail coins, which isn't the end of the world, but those retail coins are probably not going to get access to the hundreds of billions that institutions keep in their world, right? That's one way of thinking about it. There's another way of thinking about it, which is it doesn't go like that, and institutions get flooded with millennials and Gen Z over the next 10 to 20 years, and all the cryptocurrency industry that we see now isn't even as diverse as what it will be in the future, right? I think it's less likely to go that way because I think the rich only get richer here on this earth, this side of heaven, right? So I think a lot of the wealth will concentrate and utilize a fairly small pool of cryptocurrency blockchains and the peripheral technologies like Oracle's Chainlink. Um, and so that's the way that things will go, in my opinion. But I could easily be wrong. That's a very high level type of thing to pontificate about and to draw conclusions on. So if you're asking, should I hold crypto for the next 2 years? I'm with Tim, where the potential of these assets is too strong for me to step away, especially to sell for a loss some of the ones that I have. And I'm not going to sell Bitcoin. I'm not in a loss on Bitcoin, but I'm not going to sell it, right? Because it is, in my mind, my savings, right? It is better than previous technologies, older technologies that are dying off, like bonds and dollars. Is it better than real estate? I don't think so. I think Bitcoin is probably on par with real estate, but it has benefits that real estate doesn't have, right? If I put a house on the market, I can't sell it the next day, right? If I put Bitcoin on the market, I can sell it the minute that I make the decision to put it on the market. Okay, so there's pros and cons. I want to hold Bitcoin. I kind of care how much it's valued in dollars, the denominator of Bitcoin, but I also kind of don't care, right? I have the Bitcoin I have, and that's good. That's the Bitcoin. That's the money I have. That's my savings, because I know that over the long period of time, the Bitcoin is going to follow a power law. And this isn't even talking about the fundamentals. This is talking about the math that Bitcoin has, and I'm about to show you. This is the math that Bitcoin has stuck with over a long period of time. Okay, you can zoom in on this going all the way back here, and you can see that Bitcoin has never gone below this power law line, which is this bottom line. Okay, it's wicked down below it, but it's never closed. I guess it closed a candle here, but it has mostly stayed within the average of this power law here. And so that's what keeps me thinking that this is one of the aspects that keeps me so bullish on Bitcoin and keeps me thinking about it in terms of savings rather than investing. People talk about investing in Bitcoin, and obviously I probably have to talk about investing in Bitcoin, but I really do think about Bitcoin as my savings, right? And the dollars I hold, they are like these temporary purgatory currency that I use to be able to pay my rent. And because it's more stable relative to the current economy I live in, I will hold some dollars. I'm not hardcore like Jack Mallers, who does not hold dollars at all, or euros, or any kind of fiat. But yeah, for the next 2 years, I'm going to be holding. I mean, it may be longer than that, right? We'll see. We'll see. Pontificate is a good word. It's a good word. Buy low, sell high. If you bought high and you're now low, the answer is not sell, in my opinion, right? If you got to pay rent, if you got to pay bills, sell might be the right answer. But if you bought high, right? If you bought high up here and now you're low, the name of the game is not to buy high and sell low. The name of the game is to buy low and sell high, right? The reason why we're seeing so much downside is because a lot of people bought back here. And a lot of the whales that are selling, they bought back here, right? They bought Bitcoin south of 8K, 10K, whatever you want to call it. And so it makes a lot of sense for them to keep selling, right? But there's a lot of reason that the selling is not going to outweigh the buying at a certain point, meaning there will be a bottom and there will be a V-shaped recovery. The V-shaped part is an opinion. I don't know if that's going to happen, right? But according to this power law that Bitcoin has followed, there is a very low chance mathematically that this thing just completely tanks and goes to zero. And that's why I think it's a better savings mechanism on this side of heaven, right? Is a better way to value my labor units than dollars. Is it better than gold? I don't know. I think gold has its benefits too, like real estate, but it also has its limitations, which is if I wanted to, I can't send $200,000 worth of gold to my friends in Singapore, right? I can do that with Bitcoin as soon as I make the decision to do that, right? There's no friction between me transferring that much value. Whereas with gold, it's like, how would I even do that? Okay, I'm going to send $200,000 worth of gold to someone across the world. Do I have to pay for my own security? So you can kind of see how that goes. It's good stuff. Way past the news here. We usually do about 30 minutes on the news, so appreciate you if you've stuck around this long for doing so. Smash the like button and check out our partner Breakout if you are looking to trade crypto. It's a great way to trade crypto if you are short on funds, right? If you don't want to part with those altcoins you have in a loss or stocks you have in a loss. Check out Breakout today. Link is in the link tree link below. Have a great rest of your day. Adios.